The Guardian, 27th of January 2023, China has a vast network of properties in the UK and uses a variety of offshore tax havens. The Guardian has learned that the Chinese government owns a substantial network of UK real estate through offshore secrecy countries like Luxembourg and the Isle of Man, raising concerns about Beijing's control over linkages in the UK supply chain. According to disclosures filed as part of a new government record of real estate controlled via offshore corporations, China's investment division is revealed to possess more than 250 properties in Britain through dozens of firms. Distribution hubs, such as those in the southwest, southeast, and Midlands of England, are essential to the movement of food and goods throughout the UK. The China Investment Corporation, CIC, oversees the People's Republic of China's foreign exchange reserves, is estimated to have assets worth more than £970 billion, and is the ultimate owner of all the properties. According to Land Registry statistics, CIC has spent at least £580 million buying properties in the UK. However, the actual amount is probably much higher because some records are incomplete. Although CIC was known to invest in UK real estate, the scope and specifics of its acquisitions have remained a secret up to this point due to the use of a wide range of offshore entities. The registry, which made the information public, shows that CIC has concentrated on distribution hubs, retail parks, and trading estates, some of which are essential to the regional infrastructure. Concerns and disagreements within the government have been caused by Chinese investment in the UK. While some MPs applaud the influx of money into the country, others have voiced security worries over China's and Chinese corporations' involvement in vital assets. Beijing criticized the government's decision to require Huawei's removal from the 5G mobile phone infrastructure in Britain before 2027 in 2020, calling it groundless. By purchasing CGN out of its stake in the envisioned Sizewell C project, the government also abandoned plans for China General Nuclear to participate in constructing a new nuclear power station. Ian Duncan Smith, a former leader of the Conservative Party, expressed alarm about the investment's disguised use of offshore firms. He compared it to the attempted purchase of Newport Wafer Fab, a UK tech company, which initially seemed to be a Dutch corporation's target before its actual Chinese ownership was made known. Finally, the purchase was halted by the government due to security concerns. Duncan Smith, who is in charge of the Global Interparliamentary Alliance on China, said that in some cases, it is necessary to follow several links to learn who is the company's owner. It raises the issue of why they're doing this if they can acquire that much of what all sound like crucial components of the supply chain. This supports the argument that we must conduct a strategic assessment of all Chinese investments made in important UK sectors, such as supply chains, universities, and technology. We are far too receptive to Chinese business interests. Requests for comment from CIC and the Chinese embassy were not answered.